Magic question every trader asks me is what's going to happen next in the market. And that's the thing. We do not know if the market's going to go down, up, sideways, loop-to-loops, backwards. There is no magic ball. There is no cheat sheet to look at and say this is what's going to happen. But don't worry. There are tools, regulations, and things that we can look for in the market to increase our probability and increase our chances of winning. Again, in today's video, I'm going to be going over tools, strategies, and techniques to be able to see what's going to happen and potentially ride the wave with the overall trend. The biggest thing about trading, guys, and the biggest thing about being an intraday day trader is following the trend. So stay tuned, let's rock and roll, and let's hop into this video. If you guys want to join live with me, be able to have a community right next to you and be able to trade live side by side and have lessons with me and copy my exact trades of how I am able to profit these markets inside and out, go ahead and hit my link in the comments or in my bio to have a direct access to my Discord. Right now, for a limited time only, I'm giving it 100% for free. So you guys can literally make money and identify how I'm doing this for free. It can't hurt. I hope to see everybody inside, and let's keep on going with the video. How does the market move? Well, the thinking thing that you probably have heard before is supply and demand. Again, we're called the stock markets, the futures markets, the Forex market, and the market has buyers and sellers. We always need to think of that when we're trading. And the biggest thing about understanding this is how to identify and understand what supply and demand is. Well, to implement this into the markets, we got to identify, let's go back into normal economics. When there's higher supply and less demand, the market's going to go down. When there's more demand and less supply, the market's going to go up. So think about this. Yesterday we had NVIDIA earnings and again a ton of demand for that release. What happened with the overall stock? It went up. Today, hype died off. It wasn't that big of a deal. Demand started slipping. Supply was up here. What happens? This tank started dropping. That's the biggest thing we have to know about trading and identifying these overall levels. When we see a demand level, when we see a supply level, like support and resistance, we have to see, are there buyers in this location? Are there sellers in this location? How will this react to the market? And when we can identify these moves, we can figure out when to enter for the long side and when we can enter for the short side. Which now leads me to my next point. How does the market route these trades? And for us as buyers and sellers, there are two types of ways of doing this. A market order and a limit order. A market order, when you hit something, you'll be filled at the exact price that you hit the buy button. Whatever that stock is or index is at. For example, when a stock is at $45 and you hit market order, that will get filled at $45. On the other side, secondhand buyers, called non-passive buyers, is what happens. They have an order called a limit order. What is this? This is when they put it in a specific price that they want to get filled at for the market. So let's say we have a stock and it's priced at $45 a share. They do not want to get into the price of the stock until it's at $46. So what they're going to put in is a limit order at $46. So when that price reaches that level and hits that $46 mark, the order will trigger and they will get filled for that order. So think about this. When we have aggressive buyers in the market, the price is going to react differently than when we just have passive buyers in the market when people are just going to be going in at limit orders. So when we take a look at a thing and a tool called level 2 or Bookmap, we can identify where these levels of zones are. So when we can see that there's a ton of buyers at a certain level or a ton of sellers at a certain level, we can identify this and enter and exit our trades accordingly. And that's one of the biggest things that I use in conjunction with supply and demand to facilitate when I know when to enter or exit the market. So now that I told you guys about market orders and limit orders and what I told you guys about supply and demand, let's go over and hop into my charts and let me just give you guys a real life example. Alright guys, let's dive into the charts. I want to show you a visual representation of what I'm talking about so you guys can get a better understanding of what's going on. So let's start with supply. Let's start off with resistance. How can we identify that? Now, in this area right here, it's very, very easy to see. We can identify this is a supply level. Supply equals sellers. Sellers are going to push the price lower. Every time when we look to the previous data, we can see when this price comes into this level, pushes down. Comes into this level, pushes down. Again, comes into this level like today, it pushes down. We can see every time this enters this level, we can look for shorting the market and a shorting opportunity. Now let's flip it, right? let's come over here and we can see in this area, buyers. Buyers are extremely in control. Buyers have the overall push. And we can see when it gets into this level, price starts to increase. Comes into this level, price starts to increase. And again, price starts to increase. So now we can see when we're in this level of demand and the price is trading in this level, we can start looking for plays to the long side and not trying to short it. Now let's do a flip reverse. Now what happens if a price is broken through? Perfect example right here. We can see when sellers are super in control and break through a level of demand, it flips and turns into a level of supply. So now sellers are in this area, buyers are wiped out. What happens, you can see, breaks this level, comes back up, breaks this level, and now we're acting as a supply level every time it tries to come back up from previously being buyers. Now sellers are pushing the price down and now are slowly tanking. Now let's have a different opposite reaction, right? Let me find a good example for you guys to play that. Here we go. Here's a perfect example. Let me even draw the line so you guys can see that. We can see right here, every time it gets into this area of supply, we push lower. Every time we get into this area of supply, we push lower, and again, we push lower. But again, when we were trading in this time frame, buyers were in control and ripped through that price. Now sellers are wiped out of the market, buyers are in control, and it flips. And now we can see identification of buyers holding this up and continuing higher highs. Think about that. So when you guys identify a demand level, look for longs. When you identify a resistance level, look for shorts. When a level is broken on either side of the market, flip it and now look for the opposite reaction. Again, I hope this guys helps you visually understand what's happening. Let's hop back out of the charts and let's keep on going with the video. Thank you guys for watching this video. Please give it a like, please give it a subscribe, and definitely hit the bell notification so you guys can see future videos and future content that I'm going to be releasing. There's going to be so many more helpful tips, tricks, and strategies that you guys can implement to become a successful trader.